Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Thursday, August 6, 2026. Let's take a look at the chart. Start with the weekly chart. This goes back several years, and it was 3 weeks ago that we violated this 375.71, basically a year and a half long channel bottom that did hold early in the year in April. Having violated it, having closed below it on a weekly basis, we are anticipating overall 227.66 as a by the end of the year objective. But on the way down, the market offers a 3 to 5 week swing trades because that was our initial objective, is the 290s, descending channel bottom 298.62, and also the wave count that's based on the same data at 291.81. That is A minus B, subtract from C, and that takes you to 291.81. This area bottom picking territory has been mentioning now for 2 or 3 weeks, and once tested, we could potentially round up into the 370s over the next 3 to 5 weeks. Although on the way up, there is this channel bottom at 351.26 that we've been mentioning, that if you've been long since, last week when we were bottom picking the 290s, you should take at least some profits at 351.26, this former channel bottom. Is meaningful resistance unto itself. We could top out here through August and fall back into the 290s again within several weeks. You could also consider 351.26 to be kind of the initial scale out point all the way up to 375.71, where you can then aggressively play the short side through the rest of the year. Because holding below 375.71, we do maintain 227.66 as I've been saying, a 3 to 5 month objective. Let's get to the day itself. Take a look at 318.37. We are above it, and that is that long-term trend line on the weekly chart that we settled below 2 weeks ago, held last week's highs, but we've been back above it now for the last few days. 318.37 can contain daily selling pressures, and above which we still anticipate 351.26. Now, with the higher volatility framework, this could be within 3 to 5 days, but we have a pretty quiet volatility right now. So I'm going to say by the end of next week, 351.26 remains in reach. And on the way up, we have this April low of 337.24 that can contain intraday buying pressures. And if we close today above 337.24, I'd say tomorrow, Friday, we actually do test 351.26, where we can top out, as I say, not only through next week, but even perhaps into later August. Now, downside, if we do happen to break or open below 318.37, that 309.06 high of the low from last week, likely to be tested today, or at least is attainable. And if we do close today below 318.37, which is that trend line once again on the weekly chart that I can show again right here, if we do close back below that, even today, Thursday, I do think that indicates a good high for the week. That would also be below, Tuesday's low, which is the move high so far. So we'd have a couple of rationales for anticipating bearish continuation by the end of next week back into the 290. So if we do close below 318.37 and you're a 3 to 5 day swing trader who recently went long, my suggestion is to exit that long position, because over the next 3 to 5 days we can revisit the 290s, the 291.81 to 298.62 area, once again able to contain selling not only through next week but through all of August and into September, because from here we can round up. Now, are we incredibly bullish? Well, it's hard to say. I mean, how can I frame this? I am not incredibly bullish over the big picture because of the violation of 375.71. I do see any rally off of the 290s into the 370s as a counter trend rally, which is prone to failure on the way up by definition, which is one of the reasons why I emphasize this low 350s as a very sellable resistance area, that if given the opportunity to sell, you can play that short sale through August and into September. And so I wouldn't be surprised to see a revisit of the 290s because of the long-term sell signal that remains in play below 375.71. And as I've already said, I wouldn't also be surprised to see an outright settlement below 291.81. I don't see that this week, but it is quite possible over the next 2 or 3 weeks we fall back, settle below 291.81, which would then set up 227.66 as more of a 1 to 2 month month objective, say by the end of October. 227.66 is what I consider investment grade support. In combination with the 6-year channel bottom at 186.75, this zone you can scale into a long position for Tesla, not only through the rest of the year, but quite possibly through the rest of the decade, as we could round up from here nicely over the next few years. So, is there anything else to say beyond what I already have? I don't think so. Please click like, share, subscribe. Check out wickedstocks.com. I will be back tomorrow, of course, with Friday's Tesla report, and you have a great day.
If you're finding value in this analysis, it's only a glimpse of what we offer. Your real trading edge starts at wickedstocks.com. Each week, premium members receive 2 high-probability stock picks. Each one comes with a complete trade plan, including exact entry, profit target, stop loss, and regular updates so you can manage the trade with confidence. You'll also get daily video analysis in the top traded markets, the SPY, the Triple Q, and NVIDIA, highlighting the key price levels, trends, and trade setups we're focused on. Whether you're day trading or swing trading, these insights help you zero in on the highest quality opportunities with clarity.
Start your 2-week free trial and trade with clarity from day one.